What you're about to learn is one of the most powerful skills you can develop as a trader. If you master this, you'll start spotting reversals before they happen, you'll understand momentum like a pro, and you'll stop guessing and start predicting. We're talking about reading momentum through candlestick size, and once this clicks, the chart becomes 10x easier to read. Every candlestick has a message. A big candle screams, a medium candle talks, a small candle whispers. So look at this sequence right here. First, you've got a huge red candle. This is like the market saying sellers are smashing everything in their path. Momentum is strong. Pressure is insane. Price is dropping fast. Then you get a medium-sized candle, still bearish but weaker. The sellers are slowing down, not gone, but losing some force. And then a tiny candle 𝗘𝗃𝗪𝗧. This is the market basically whispering, sellers are running out of energy. Momentum is almost gone. The push downward is fading hard. This is one of the most important momentum signals you will ever see. And here comes the plot twist. What if this exact pattern shows up right at a major support level? This is where smart traders make money. When you see a big bearish candle, medium bearish candle, tiny bearish candle, all forming near a key support zone. This is the chart shouting at you. Sellers are exhausted. Buyers are about to take control. This is your moment to prepare for a buy, because when sellers run out of power, buyers love to jump in and reverse the market. And you know what usually happens right after? Boom! Green candles start printing. Price lifts off the support zone, momentum shifts from bearish to bullish, and you catch the move early. Why this works so well? Because momentum always slows down before price reverses. The market doesn't magically flip directions out of nowhere, it leaves clues. The candles get smaller, the pressure weakens, the push loses steam, and then the other side takes over. If you can read these signs, and trust me, now that I showed you, you'll start seeing them everywhere, you'll be able to time entries with way more accuracy. You're catching the exact turning points, the spots where the crowd panics, but you calmly enter and ride the reversal. This is how you start trading with confidence, precision, and real skill. Most traders do this huge mistake. They stare at every candlestick on every time frame, and that's why they get lost. You do not need to look at everything. You only focus on one thing. Candlesticks that form at key levels. Anything forming in the middle of the chart? Trash. Useless. Noise. It's like trying to decode a secret message from random background sounds. No context, no meaning, nothing you can actually trade. If you enter a trade in the middle of nowhere, you're basically taking a blindfolded shot and praying for the best. Picture this. You hit buy smack in the middle of the chart, your stop loss ends up below, your target is the nearest level, and boom, your risk to reward is just 1-to-1, which is basically the most boring trade ever. Why even bother? But if you wait for price to hit a real key level, like a strong resistance, and you take a sell from there, now you can place your stop loss above resistance, aim your target at the next level, and suddenly your risk to reward looks beautiful. Like 1-3, 1-4, even 1-5. That's when trading finally makes sense. This is why I always tell you, only pay attention to candlesticks that form at strong support and resistance. That's where reversals happen, that's where the big moves start, and that's where you want to be waiting like a sniper. Now check this out. Price has already shot up like crazy, and you might be tempted to jump in and buy because you don't want to miss the move. Stop. Don't do it. That's how accounts explode, and not in a good way. What you should do is wait for price to reach the next key level. Then ask yourself, is the candlestick showing signs of reversal, or is it showing strong momentum for a breakout? If you see reversal signals, that's your sell opportunity. If it looks like a breakout, you still don't buy immediately. Later in the video, I'll show you exactly how to enter breakouts with high accuracy. No guessing, no gambling. And now we hit the most important part of this entire video, how to read Japanese candlesticks at key levels. This is a skill every trader must have. Non-negotiable, no shortcuts, no excuses. Once you master it, you'll be able to enter trades faster, smarter, and with way more confidence. The chart becomes like a storybook. You instantly know when price wants to reverse, when it wants to continue, and when it wants to fake you out. So stay locked in because we're about to go deep, And by the end of this video, your candlestick reading skills will level up so fast it's going to feel unreal. Let's jump in. All right, traders, listen up, because what I'm about to say might be the most important thing you'll ever hear in your trading journey. This video you're watching right now, this might be the video that changes everything for you. If you're serious about becoming a successful trader, even if you're just getting started, then you absolutely, positively must understand how to read Japanese candlesticks. No excuses, no shortcuts, no maybe later. This is the foundation of everything. And here's the crazy part. In this class, I'm going to walk you through everything you need to know about candlesticks, literally from A to Z, so clearly and so simply that even someone who has never seen a chart in their entire life can understand it. Doesn't matter if you're a complete beginner who just discovered what a candlestick is 5 minutes ago, or you're a trader who's been grinding for years and wants to level up to serious, consistent, professional level trading. This class is for everyone, every skill level, every background, and I guarantee you will walk away knowing something new and game-changing. Now, here's how we're breaking it down, and trust me, this structure is designed to level you up as fast as possible. Part 1, we're starting with the absolute fundamentals. How to properly read and understand a candlestick. Not just green means up, red means down. No, we're diving into what each candle really tells you about buyers, sellers, momentum, power, emotion, everything. This is the core skill you must master before anything else. Part 2, once you understand the candles themselves, we're taking them live to the chart. You're going to learn how to read candlesticks in context, how to analyze them like a real trader, how to understand what the market is trying to do, and how to make actual real-world trading decisions based entirely on the candles you're reading. This is where everything starts to click together. Part 3, now we go big. You're going to learn the most powerful candlestick patterns that pro traders use, patterns that can help you identify strong reversals, trend continuations, high probability entries, and everything you need to build consistent profit in the market. These are the patterns that separate lucky guesses from confident, calculated decisions. And that's the game plan. 3 parts, clear, structured, powerful. And by the end of this class, you won't just know candlesticks. You'll understand them like a trader who's ready to take on the market with confidence. All right, traders, get ready because we're diving in fast. First thing you got to know is this. There are 2 main types of Japanese candlesticks. Only 2. And once you understand these, everything else becomes easy. Bullish candlesticks, these mean price is moving up. Bearish candlesticks, these mean price is moving down. That's it. Up or down. Simple. Now look at this example. A candlestick that's pushing upward, boom, that's a bullish candle. And that big rectangular part in the middle, that's called the body. The thin lines sticking out above and below, those are called wicks or shadows. And yes, wick equals shadow, shadow equals wick. They're the same thing, don't overthink it. All right, now watch closely because this part is super important. On a bullish candle, the bottom of the body is the opening price and the top of the body is the closing price. Why? Because the price went up, so it has to close higher than it opened. The highest point that price reached during that entire candle, that's your high. The lowest point, your low. Boom, easy. Now let's flip it. On a bearish candle, the candle opens at the top of the body and closes at the bottom because price is falling. Sellers are pushing the market down, and by the time that candle finishes forming, the closing price is lower than where it opened. But just like the bullish candle, you still have a highest point price reached, a lowest point price reached. These show you the full range of movement inside that time period. And those thin lines, let's make this crystal clear. Upper wick, the market tried to push higher but couldn't stay there. Lower wick, the market dipped lower, but buyers pushed it back up. Same meaning, same purpose. Whether you call it a wick or a shadow, it tells you how far price traveled before getting rejected. So remember this. Body equals where the real battle happened. Wicks, where price tried to go but couldn't stay. Once you understand that, candlesticks stop being confusing and start becoming one of the most powerful tools you'll ever use in trading. All right, traders, this is where things start getting really, really exciting because once you understand this next concept, you're going to look at candlesticks and instantly know who is winning the battle, buyers or sellers, without needing to memorize a million patterns. Seriously, this is the shortcut, this is the cheat code, this is the aha moment that makes candlesticks suddenly make perfect sense. So here's the deal, every candlestick on your chart is simply a visual story of buying pressure and selling pressure. If you understand that story, you understand the market. And if you understand the market, you can trade with confidence instead of guessing. Let's break it down in the most explosive, easy to understand way possible. Selling pressure. When sellers take over, look at this example right here. Price actually pushed up at one point. It climbed all the way to this high, but guess what? Sellers came in hard. They slammed the price back down, shoving it lower and lower until the candle finally closed way below the high. That long upper wick you're seeing, that's the proof. It's like the market tried to fly, but sellers grabbed it by the legs and dragged it back down. That's selling pressure. And when you see it, it means the sellers are strong, active, and ready to push the market downward. Buying pressure. When buyers fight back, now flip the scenario. If the candle has a long wick on the bottom, here's what happened. Price dropped hard. It fell all the way to the lowest point. But then, boom! Buyers rushed in like a wave, pushed the price back up, and forced the candle to close way higher than the low. That's buying pressure. It's strong, it's aggressive, and it usually means buyers aren't done yet. How to interpret it like a pro. Whenever you see a candle that closes strong upward, regardless of colour, that tells you buyers are stepping in, and the next candle has a good chance of continuing upward because the momentum is there. But if you see a candle showing heavy rejection from above, that's sellers flexing, and the next candle could easily push lower and form a clean, strong red candle. This is how you start reading candlesticks without memorizing anything. You're reading behavior, not shapes. Real money example, at resistance. Now let's connect this to real trading. Imagine price reaches a resistance area, a key level where the market often reverses. And right at that level, you see a candle with a huge upper wick, tiny body, and a weak close. What does that mean? It means sellers didn't just show up, they dominated. They crushed the buyers who tried to push price up. And when that happens at resistance, that's your sell setup. That's the moment to prepare your entry, because right after that, you usually see multiple red candles forming, driving the market downward in a clean, strong move. This is the power of understanding pressure, buying pressure and selling pressure. Master this, and candlesticks stop being confusing shapes. They become signals, warnings, opportunities. Clues that tell you exactly what the market wants to do next. Let's go fast and clear. Long upper wick, sellers dominating. If you see a candlestick with a long upper wick, like the price tried to blast upward but got smacked back down, that is a massive sign of selling pressure. Think of it like the market reaching up for a high five, and sellers just shove the hand away and slam price back down. Anytime you see that shape, especially at a key level, it's like the chart shouting, "Yo, sellers are stepping in hard. Price might drop next." This is one of the most underrated signals traders ignore, and it costs them. Long lower wick equals buyers striking back. Now flip it. If you see a candle with a long lower wick, that means price tanked downward, hit a low, and then buyers came in like a tidal wave and pushed the price back up. This is buying pressure. This is strength. This is the market saying, buyers aren't done. This thing might explode upward next. And guess what? In many cases, the next candles do keep pushing higher. But here's the secret that so many traders get wrong. The color of the candlestick does not matter. Let me repeat that louder. The color does not matter. I don't care if the candle is red, blue, purple, or neon pink. What matters is the wick. If the lower wick is long, then that is bullish confirmation, even if the candle is technically red. If the upper wick is long, that is bearish confirmation, even if the candle is green. Why? Because candlestick color only tells you where price opened and closed, but the wick tells you the battle that happened in between, and that's where the real information is. So always focus on wick structure. Wicks are the fingerprints of market pressure. They reveal who took control, buyers or sellers. And once you understand this, you literally start seeing the market's intentions right in front of you. All right? This is where your candlestick reading skills start leveling up fast. We're about to compare two candlesticks in a way that will make you say, wait, why did no one ever explain it this clearly before? This is one of the easiest visual signals in trading, yet almost nobody pays attention to it. And once you understand it, you'll instantly start reading momentum like a pro. Look at these two candles. Really look. One of them has a big, long body. Thick, strong, full of energy. The other one has a small, tiny body, weak, quiet, barely doing anything. So what does that means? The candle with the long body is packed with power. That long body is shouting, hey, there's massive buying force here, or massive selling force, depending on direction. A long body means strong momentum, high volume, aggressive buyers or sellers, real movement in the market, a battle that one side clearly won. Meanwhile, the tiny candle with the short body, it's like the market is whispering, nobody's really doing anything right now. No momentum, no conviction, no one is in control. So, here's the rule you must never forget. The longer the body, the stronger the pressure, period. Whether it's bullish or bearish, a long body means that one side dominated the entire candle from start to finish. When you compare a strong long candle versus a weak tiny one, it becomes obvious who's in control. The long candle is the heavyweight champion. The tiny candle is a featherweight trying to punch uphill. Why this matters. Candlestick bodies literally tell you the energy of the market right now. They reveal if buyers are exploding forward, or if sellers are bulldozing through the chart, or if the market is just chilling, waiting for something to happen. If you want to understand momentum, real momentum, the first thing you look at is the body. Not the color, not the pattern name, not some complicated indicator, just the body. So always pay attention to candle size. A massive candle, that's the market screaming its intentions. A tiny candle, that's the market hesitating. And once you start reading candle bodies like this, you'll instantly understand what's actually happening behind the scenes, and you'll make way smarter decisions because of it. Okay traders, we're about to talk about one of the rarest, most explosive candlestick signals you will ever see on a chart. And once you understand what it means, you'll instantly know when the market is going full force in one direction. Get ready because this is huge. The no wick candle, the market's ultimate power move. Imagine you're looking at a candlestick and it has no wick, no little line on top, no little line on the bottom, just a big solid body. That's not just a candle. That is the market screaming at the top of its lungs. When you see a green candlestick with zero wick on either side, that means buyers controlled every inch of price movement. Sellers didn't even stand a chance. Price opened at the low and closed at the absolute high. Momentum is exploding upward. The market is practically begging to continue pushing higher. This is maximum buying pressure. It's like buyers put the market in a rocket, hit the launch button, and it blasted straight up with no stops. This type of candle is rare, powerful, and extremely important. The bearish version, equally terrifying. Now flip it around. If you ever see a red candle with absolutely no wick on top or bottom, guess what? That means sellers dominated from the very first tick. Buyers didn't fight back even a little. Price opened at the high and closed at the absolute low. The market was crushed downward without a single pause. Momentum is aggressively bearish. This is maximum selling pressure. It's the market getting steamrolled by sellers with zero resistance. When you see this, it's like the chart yelling, sellers are in full control. Get ready, we're going down. Why these candles are so important? Candles with no wick are one of the strongest momentum signals you can ever get. They tell you the market didn't hesitate, didn't pull back, didn't get rejected. It just moved straight in one direction with pure conviction. No wick means no counterattack, no struggle, no slowdown, just raw, unstoppable force. When you see one of these at the right place, like a breakout, a retest, or at a key level, you must pay attention because it often marks the beginning of a massive follow-through move. This is one of the clearest, most explosive signs the market can give you. And now that you know what it means, you'll never miss it again. This next tip is an absolute game changer. What you're about to learn is one of the most powerful skills you can develop as a trader. If you master this, you'll start spotting reversals before they happen, you'll understand momentum like a pro, and you'll stop guessing and start predicting. We're talking about reading momentum through candlestick size, and once this clicks, the chart becomes 10x easier to read. Every candlestick has a message. A big candle screams, a medium candle talks, a small candle whispers. So look at this sequence right here. First, you've got a huge red candle. This is like the market saying sellers are smashing everything in their path. Momentum is strong. Pressure is insane. Price is dropping fast. Then you get a medium-sized candle, still bearish but weaker. The sellers are slowing down, not gone, but losing some force. And then a tiny candle 𝗙𝗏𝗪𝗧. This is the market basically whispering, sellers are running out of energy. Momentum is almost gone. The push downward is fading hard. This is one of the most important momentum signals you will ever see. And here comes the plot twist. What if this exact pattern shows up right at a major support level? This is where smart traders make money. When you see a big bearish candle, medium bearish candle, tiny bearish candle, all forming near a key support zone. This is the chart shouting at you. Sellers are exhausted. Buyers are about to take control. This is your moment to prepare for a buy, because when sellers run out of power, buyers love to jump in and reverse the market. And you know what usually happens right after? Boom! Green candles start printing. Price lifts off the support zone, momentum shifts from bearish to bullish, and you catch the move early. Why this works so well? Because momentum always slows down before price reverses. The market doesn't magically flip directions out of nowhere, it leaves clues. The candles get smaller, the pressure weakens, the push loses steam, and then the other side takes over. If you can read these signs, and trust me, now that I showed you, you'll start seeing them everywhere, you'll be able to time entries with way more accuracy. You're catching the exact turning points, the spots where the crowd panics, but you calmly enter and ride the reversal. This is how you start trading with confidence, precision, and real skill. You're about to understand something that new traders always miss, but once you see it, you cannot unsee it. This is one of the most powerful clues the market gives you, and it's all hidden inside the length of a candle's wick. The longer the wick, the bigger the story. Imagine the wick is the battle scar of the candle. The longer it is, the crazier the fight was. So here's what happens. A long lower wick means the price was pushed way down, but buyers came in like a stampede and yeeted the price back up. That means sellers tried to crash the market. Buyers refused to let that happen. The downtrend is losing strength. Momentum is shifting, the power is changing sides. And when you see a long lower wick, especially in a downtrend, it's like the chart yelling, buyers are waking up! A reversal might be coming. Most of the time, you'll see the next candle turn green and start lifting the price upward. It's one of the cleanest reversal signals you'll ever get. But now, let's flip it. What about a long upper wick? Oh boy, that's the opposite story. A long upper wick means the price tried to go higher, tried to explode upward, but sellers slammed it back down. This is the market telling you the uptrend is losing power. Buyers are running out of fuel, sellers are stepping in hard, the price might be ready to roll over. This is often the first sign that the trend is weakening. Not the second, not the third, the first. It's like watching someone sprint full speed and suddenly they're gasping for air. You know they're about to slow down. Why this signal is so powerful? Because wicks reveal emotions. They show who's fighting harder. They expose the moment buyers or sellers get overwhelmed, and the longer the wick, the bigger the shift happening underneath the surface. If you learn to read this, you're basically reading the market's heartbeat in real time. This is how pro traders spot reversals early. This is how you avoid getting trapped in dead trends. And this is how you start making cleaner, smarter, more confident decisions. So now that you actually understand how to read a candlestick, not just the color, not just the shape, but the story behind every wick and every body, we're about to take things to a whole new level. This is where you learn to see the market like a pro. In the next section, I'm going to show you how to look at a chart and instantly understand what's going on. Why price is moving, where buyers are hiding, where sellers are pushing back, and which direction the market actually wants to go. We're talking about real analysis, real decision making, real trading logic. The kind of stuff that makes you go, wait, how did I not see this before? So listen closely, I'm about to walk you through the full blueprint, the complete start to finish method for reading candlestick patterns the right way. Not the half-baked version people post on TikTok, not the memorize 500 patterns nonsense, but the real logic behind candlesticks that actually makes you money. And yes, this is the $1 million secret every trader wishes they learned earlier. Rule number 1, and you must get this right. Your focus should never be on every random candlestick that pops up across the chart. The only candlesticks that matter, the ones that actually have predictive power, are the ones that form at key levels or along valid trend lines. If you're staring at candles floating in the middle of nowhere, you're basically flipping a coin with terrible odds and a terrible risk to reward and a trade that will eat up your capital one tiny loss at a time. And sure, sometimes you randomly make a little profit, but it's tiny, inconsistent, and never worth the risk. This is why trading from the middle of the chart is one of the most expensive mistakes beginners make. Key levels equals context. Context equals logic. Logic equals real trading. Now let me show you the difference. If you enter a buy in the middle of the chart, your stop loss has to go somewhere below, your take profit has to go somewhere above, and you're stuck with a 1-to-1 risk reward at best. That is basically gambling with extra steps. But if you wait, if you're patient and you enter at a key level, let's say you take a sell from this resistance area, now you can put your stop loss above resistance, aim for the next support level, and suddenly your risk to reward becomes beautiful, like 1-2, 1-3, or even more. That right there is how real traders stay profitable. This is why I tell you over and over, ignore the noise, wait for the zones, because candlestick formations at key levels can literally signal a full reversal, and that's where the best entries happen. Let me give you a real chart example. Price shoots upward aggressively. You feel FOMO, you want to buy, but that's exactly when you don't buy. You wait, you let price hit the next key level. And once it gets there, that's when you zoom in and analyze the candlestick. Is the candlestick showing reversal signs? Then you've got a sell setup forming. Is the candlestick showing strong breakout momentum? Then no, you do not instantly buy. There's a smarter, safer way to enter breakouts, and I'll show you exactly how to do it later in this video with sniper level accuracy. This is the non-negotiable skill every trader must master. Everything comes down to this. You must know how to read Japanese candlesticks specifically at key levels if you ever want to trade properly. This is not optional. This is not nice to have. This is the foundation that separates emotional traders from strategic traders. And once you master this skill, your entire trading game changes forever. Alright guys, to get high accuracy entries, and I mean entries that feel like you've got X-ray vision on the market, you must prioritize higher timeframes first. I repeat, always start with the higher time frame. Why? Because lower timeframes, 1 minute, 5 minutes, 15 minutes, are basically chaos. Noise everywhere, fake signals everywhere, candlestick patterns that look powerful but collapse instantly. It's like trying to listen to someone whisper inside a tornado. Let me show you exactly what I mean. Example, why low time frames love to lie. We've got what looks like a tweezer bottom. Classic reversal pattern, one red candle, then one green. Looks clean, looks perfect, looks like price is about to fly. But guess what happens? Price absolutely tanks. It dumps even lower. Why? Because the lower the time frame, the weaker the candlestick signal becomes. It's like using a cheap magnifying glass to look at the sun. It's not built for the job. But here's the pro level strategy. First, you check the higher time frame, H4, daily, whatever you use. You find a big, clean, strong confirmation, a rejection, a key level, a major wick, a clear momentum shift. Then, and only then, you drop down to the lower time frame to hunt for your sniper entry. You get a doji, a rejection wick, momentum slowing down, perfect. Price pushed up hard, buyers tried to break resistance, but sellers smashed it down instantly. The candle closes with a massive wick, a huge sign that sellers are taking control. That's your green light, that's your sniper shot, that's your take the sell now signal. And if you take that sell, you're already sitting in profit as the market drops like a rock. Why this strategy is so powerful? Because higher time frame equals big picture confirmation. Lower time frame equals precision entry. Combine them and you get insanely accurate entries, tiny stop losses, massive potential profits, and almost zero confusion. It's literally the best of both worlds. Higher time frame confirmation plus lower time frame entry equals a combination so strong it feels illegal. All right, this next part is going to blow your mind even more, so let's keep going. Okay guys, here's something absolutely crucial that most beginners ignore. You must compare the size of a candlestick's body to the length of its wick. This tiny detail can literally tell you who's winning the battle between buyers and sellers. Picture this. Candlestick A has a huge full-length body and tiny little wicks. Candlestick B has a tiny weak body, but a long dramatic wick sticking out. Now ask yourself, which one has real power behind it? Which one shows actual momentum, real volume, and a strong push in one direction? Boom. It's Candlestick A every single time. A big body means the market moved from open to close with determination. No hesitation, no struggle, just pure aggressive pressure from one side. That's the kind of candle that screams, move out of the way, momentum is taking over. What the hell? It's really mean. If you see a candlestick with a big body and tiny wicks, that's a super clean sign of strong momentum. It tells you the market went in one direction and barely got pushed back. But if you see a candle with a tiny body and a long wick, that's indecision. That's uncertainty. That's the market saying, I'm not sure where to go. Someone just pushed me around. The longer the wick, the weaker the conviction. The smaller the wick, the stronger the confirmation. Watch how the market follows through. Check this out. You see a massive green candle, body thick, tall, clean, barely any wick. What usually happens next? Exactly. The next candle is often another green candle. Why? Because buyers are in full control, momentum is strong, and the market is charging upward like a freight train. Candlesticks tell you a story. Every single candlestick is like a live report of who's dominating. Big body plus small wick, strong conviction. Small bodies, long wick, hesitation, rejection, weakness. Body versus wick ratio equals momentum detector. Once you understand how to read this, you're not just guessing anymore, you're reading the story of the market in real time. This is exactly how professional traders understand momentum before the move actually happens. And once you get this skill, your entries are going to become cleaner, sharper, and insanely accurate. So listen, a long time ago, I used to think that to become a successful trader, you had to memorize every single candlestick pattern ever invented. Like literally all of them. The weird ones, the ancient ones, the ones nobody even uses anymore. I thought real traders had some magical dictionary inside their heads, but guess what? That is completely wrong. You don't need to memorize 100 patterns. You don't need to know every exotic name. You don't need to turn trading into a homework assignment from outer space. In reality, and I'm talking from experience, you only need 3 candlestick patterns that you actually understand on a deep, practical level. Just 3. Not 50, not 100. 3. For me, my go-to patterns, the ones I've relied on for years, are bullish engulfing, bearish engulfing, morning star and evening star formation, and the almighty doji. Yes, technically that's more than 3 types, but they fall into 3 core categories, and that's all you need. These patterns alone can help you read market direction, momentum, and reversal like a beast. They show up everywhere. They're easy to recognize, and most importantly, they work. Now, you might be wondering, what about all those weird, complicated candlestick patterns with names I can't even pronounce? Honestly, half of them I don't even know. The other half, I don't even care about. And the rest? They're basically useless for real trading because they barely ever appear, or they look ridiculously similar to something simpler you already understand. You don't need to fill your brain with fluff. What you do need is this. Find a few patterns that fit your style, master them until you can spot them instantly, and use them consistently. That's it. That's the real secret. Not memorization, not complexity, not becoming a walking encyclopedia of candlesticks, just simple, clear, effective price action. So stop stressing about learning every pattern in the universe. Start focusing on the ones that actually make sense to you, the ones that show up often, the ones that give real results. Because when you master the right three, your trading becomes faster, cleaner, easier, and way more profitable. This is the mindset shift that changes everything. And the next part of this lesson is going to push your skills even further. Buckle up. All right, guys, this is it. The part everyone's been waiting for. The part that separates random traders from laser-focused, high-accuracy snipers. Let's dive in and buckle up because this is going to be intense. So here's the truth. If you want high accuracy entries, the kind of entries that feel unreal because they're so clean, you must follow one rule that every successful trader lives and breathes. When price hits a key level, do not enter immediately. I know the temptation. Price touches resistance or support and your brain screams, "This is the moment, get in." But that's exactly how traders blow accounts, because at a key level, price has three possible choices. And none of them care about your feelings. 1, break the level. 2, reject the level. 3, move sideways and trap everyone. You cannot guess, you cannot assume, you cannot force it. You must react, not predict. If price is still moving sideways, wobbling around, creating tiny candles that look confused and exhausted, I'm out. I'm sitting on my hands. I'm literally doing nothing except watching and waiting for one thing. A real, clear, undeniable signal. Not a weak candle, not a half-hearted attempt at reversal, not some random wick that looks like it needs therapy. I'm waiting for a clean, powerful candle that screams, "This level is done, we're moving now." And here's exactly what that looks like. Price hits resistance, it stalls, it consolidates, nothing is obvious yet. So we wait, and then boom! A massive bearish engulfing candle wipes out the previous candle entirely, slamming price down from the resistance zone like a hammer. That is your entry. That is confirmation. That is where high accuracy traders strike. Enter the sell. Stop loss goes safely above the level. Take profit goes to the next key level. And what happens? Price dumps exactly like the setup predicted. Smooth, clean, no drama. Just a textbook reversal. This is why patience is more powerful than prediction. This is why reacting beats guessing every single time. This is why you never enter just because price touches a zone. And now, something most beginners never understand until they lose money. Your entry is not the most important thing. Your trade survives because of your take profit, stop loss, risk reward ratio, lot size, risk management discipline. You can have the greatest entry setup in the entire universe, but if your risk management is trash, you will still lose. You must protect your capital like it's your oxygen. You must survive long enough to let your strategy work. You must treat risk management as seriously as you treat your entry signals. Because in this game, consistency beats luck, longevity beats excitement, and controlled risk beats everything. Master your entries, master your patience, master your risk, and you will last long enough to win. I hope you enjoyed today's video because I put everything on the table for you. If you found value here, smash that like button, it helps more than you know. And if you're new to the channel, hit subscribe so you don't miss the next breakdown. I hope the rest of your week goes smoothly. I hope every trade you take is green, and I can't wait to see you in the next video. Let's keep growing, let's keep learning, and I'll see you there.